Hello everyone, my name is Roman Kornev, and you are on the channel about professional trading and investments. Today, we will talk about what a trend reversal is, a price reversal, and how to find it on a chart. First of all, I would like to say that there are several ways to find a reversal, but we will focus on one way. This is a way to use trend lines or support and resistance lines. When searching for a reversal, various graphical analysis patterns are often searched for, such as heads and shoulders, double top, double bottom, triple bottom, and so on. In fact, it's much easier to use another method, which I'll talk about today. For me, first of all, the search for a reversal is not a search for patterns, but for recurring trends. Moreover, we need to find a trend that repeats itself in the near future. That is, a few hours or days ago, weeks at the most. What happened a long time ago is unlikely to have much effect on the current position. So, let's look at the chart of the Swiss franc. And the first thing that catches our eye. This is an uptrend, then a downtrend, then an uptrend, and a downtrend again. What is important to understand here? The fact that there is a recurring trend of rising and falling, rising and falling. It is repetitive, not in the sense that the price rises and falls in general. It does this every day, but in the fact that we see it on the chart precisely as similar structures, somewhat similar in size and distance. Price range, quotation range. That's what's important. Exactly what the range and distance should be. I'll talk about this in detail in the training course. Now I will tell you only the basic things. So, we saw the rise and fall. Accordingly, we can mark this peak, the extreme, as a turning point that has already happened. We didn't have to define it, it just happened as a fact. As well as the second turning point, which has also already occurred. Now if we take a trend line and combine these two highs at the tips of the shadows, not the body, but the shadows exactly. Why do some people use shadows? Some people use the candle body to determine the trend line. This is a topic for a separate conversation. But it's the shadow that's important to me. Why? Because the price tells us that she has already been here. It was at this point that she turned around. Therefore, this is what is important in my definition method. So, we've identified the shadow. The trend line, the downward trend, is precisely along these extremes. And now, when we see that the price is rising again, the next time, and approaching the resistance line, this line is called the resistance line or resistance line. So, when the price approaches it, then when touching this line, the price reverses again. This is exactly the point where we can enter into a trade. That is, place a sell order and earn drops. In other words, we expect to reduce the price and earn money from it. Where exactly to place a sell order, where to close it, and how to determine the risk. I tell you about this in my training. The ranges between extremes are also very important. And the range of volatility at the moment is important. All this needs to be taken into account. But in this little video, of course, I'll have time to talk about it. It is only important to understand that when we have identified a trend line and the price touches it, it is likely to make a reversal. And what kind of figure will be there doesn't matter anymore. There may be a head and shoulders, a double top, or a triple top. That is, the market will already form any reversal pattern on its own. The main thing is that we already know for sure that there will be a price reversal and we can make money from it. Be sure to watch the video on how to use the broker's borrowed funds in order to make money even on small movements. Trade with pleasure. All bye.